Hey guys, Rudy coming at you live from Palm Beach in Florida. It is Monday. It is October the 13th, and I will be hitting the road later this week to go and do some site visits at a mining company in Mexico. And what I thought I would do is take a bit of time to introduce the company to you in case you have not heard of it before. And then what I will do is while I am away, I will share information about Heliostar with you when I get back, because obviously while I'm there, I will have plenty of time to not only shoot some still shots and video, but I'll probably also get a good chance to, or several opportunities to interview Charles Funk, who's the CEO, and Stephen Sook, who's the Vice President of Investor Relations, and talk to them so that you can hear the story from them firsthand. But what I thought I would do today is give you an introduction and an overview to Heliostar from my vantage point. And just for the sake of transparency, I am long Heliostar, so I do own a position in Heliostar, and I'm actually building it as I go along. So I've been adding to my original investment over time, mainly through GTC, or good till canceled orders. So I put in a price that I prefer to buy at, and then of course it falls in tranches over time or not, depending on what the stock price does. So on a day like Friday last week, for instance, when the stock price suddenly tanked, apparently because President Trump was issuing some mean tweets about China and tariffs. But anyway, whatever the reason was, the stock pulled back and one of my tranches filled there, so I added to that position again. Um, and I will continue potentially adding to the position as we go along. What I want to do though is to take a few minutes to tell you about Heliostar, and then you can let me know in the comments what you think about this investment opportunity in this junior mining company focused on gold production in Mexico. So, just by way of a quick overview, so we can be on the same page, Heliostar is a junior gold producer, focused on assets in Mexico. The primary producing assets right now are the La Colorada and St. Augustine mines. And there's a new high-grade Ana Paula development project. They just recently, I think it was in August, received a permit for this open pit mine, which is Ana Paula, which, by the way, is one of the properties I'm going to be visiting. As of October 13th, the stock was trading at around 2 Canadian dollars, so it's about a buck 40-ish US, and it has a market cap of approximately 490 million Canadian dollars. So it's well on its way to achieving billion-dollar status as it moves from being a junior to a mid-tier. Of course, the gold market has been going strong, and Heliostar has been showing robust operational performance and growth catalysts. Most of the guidance that they've issued have been at gold prices around 2,600 bucks or so, but of course, currently gold is trading at over $4,000 an ounce. But as usual, be aware of the fact that there are always risks when you invest in junior mining. So about the trip that's coming up. So on Friday, I depart from Mexico City, which is sort of over here somewhere. And then we're going to go south, maybe southwest would be better in terms of direction, to the Ana Paula project, which is the new open pit mine. And then we'll make our way back before we go to Hermosillo, which is a city very close to the US border up here on the northern side of Mexico. And we will visit the La Colorada mine before I make my way back to Mexico City over here somewhere. And then from there, I will fly back to Miami. So I'm going to be away for most of next week and a few days extra. So not sure when I'll be making the next follow-up video to this one, but as I said at the start, I will be generating some footage, including some interviews with some of the people who are currently working for Heliostar. So the region that I will be visiting first, which is Ana Paula, hosts several active mines. The Torex mine gold Morelos complex. Morelos is up here on the image. And Equinos's gold Los Filos mine, that kind of is just under my thumbnail here, my little picture on the far right. So the Los Filos mine is under my picture, and the Morelos uh, mine complex is up here on the left, and then Ana Paula is here. The reason why that is of importance is because when you are surrounded by large gold mines, you might also be a target for acquisition, which is just something to keep in mind and to be aware of. Morelos is one of the 10 largest gold mines in the world. The next mine, as I said, that I'll be visiting is La Colorada. And La Colorada has a current mine life, which is continued production from three sequentially staged deposits. So the junkyard stockpile, now I haven't visited these before, so I'm not familiar with them, but you can see it's highlighted here with drill collars in red, plus the El Creston and the Veta Madre pit expansions equals approximately 377,000 ounces of gold, which gives you about a 6.5 year mine life based on the current production guidance for this particular asset. If we look at the charts for just a minute, I'm going to show you 2 year, but they're for the same company. So on the over-the-counter OTC markets, you can buy or invest in Heliostar with a ticker symbol HSTXF. The stock price, as of today, it was trading at about $1.44. And over the past year to date, so since January of this year, Heliostar is up about 237, 238%. So it has been performing quite nicely. How about in Canada? In Canada, you can buy Heliostar for approximately $2. The ticker symbol on the Venture Exchange, so TSXV is the Toronto Stock Exchange Venture for small cap companies, is HSTR. Right here at the bottom, you can see the market cap that I referred to just a minute ago. Of course, the Canadian market is closed today because it's Canadian Thanksgiving. So happy Thanksgiving to all our Canadian subscribers and viewers. Thank you for watching. And I hope you enjoy a great, fantastic Thanksgiving with your family and friends. Next earnings, they say, is coming up on 21 November 2025. And here you can see the rate of return on the chart also for a year-to-date period in Canadian dollars of around $220. So a pretty good picture. There's not too much here that you can look at and perhaps attach a negative connotation to, because in general, other than for the fact that it's a junior, so it doesn't pay a dividend, but other than that, everything looks pretty good. So let's talk a little bit about these producing assets. So two gold mines in Mexico, La Colorado and Sonora, and the St. Augustine mine in Durango. In 2024, Heliostar produced approximately 20,795 gold equivalent ounces, GEOs or GEOs, including 20,298 gold ounces and 43,076 silver ounces. And you can do your own math on this, right? So the gold price currently is $4,000 an ounce or thereabouts. Obviously, in 2024, it was not $4,000. But you can kind of get an indication in terms of if the production were the same today, you can multiply the gold ounces by about $4,000 and the silver ounces by about $50, I'm sorry, per ounce in order to calculate the estimated earnings if you want to do it that way. Or otherwise, what you can do is you can say for 2025, their production guidance is approximately 31 to 41,000 GEOs, which is gold equivalent ounces, right? So now that's quite a broad range. So if you take the midpoint there, it's 35,000 approximately, multiplied by the average gold price, which might have been for the year around $3,200 or so, and you can sort of do your own back of the napkin math to sort of see where they're going to land for 2025. In the last quarter that they reported, so Q2 of 2025, they showed production of 7,262 ounces of gold. They sold 8,556 gold equivalent ounces and generated approximately $28 million in revenue. This is in US dollars. So a big swing from going from a junior explorer to a producer. And you can see it on this chart here. If we look at the fundamentals, the key measures here shows you the earnings per share growth and the net income growth as a percentage. And you can see the swing from, let's say, 2021 to where we are today, 205% and 242% respectively. How about profitability? Because it's important that the company not only has cash and no debt or low debt, but it should also be profitable. Otherwise, I don't want to invest. TTM means trailing 12-month profit margin, approximately 39%, an operating margin of about 27%. It generated net income of about $25 million. And EBITDA, I don't really like EBITDA. I prefer to count the cash that's in the cash register rather than using financial equations that are sometimes manipulated because of things like depreciation, which is not an expense per se, but it is a balance sheet expense that you can obviously use to minimize your taxes. Anyway, I don't really like EBITDA. I prefer to look at things like uh, gross income and net income when I do my own analysis, and maybe you could do the same, or you can let me know if you think differently. That's okay. But anyway, as of June 30th, 2025, they had EBITDA of about $11 million. I like the net income of 25 million US dollars. For the last quarter, Q2 2025, as I said, the Q3 earnings report is expected around November 21. They generated 14 million US dollars operating earnings. That's 51% operating margin on sales of that 8,556 gold equivalent ounces or GEOs. They ended Q2 with about $30 million in cash. They had about 52 million working in working capital and zero debt, right? Companies that have zero debt very, very seldom go out of business. So this is a good looking fundamental sheet here combined with the one I showed you on the previous slide. Strongly positioned for continued profitability amid a high gold price. And of course, the gold price currently at around $4,000 is very, very favorable to a junior focused on gold. How about as an investment? Well, they have strong production, right? So I've shared some of this information with you already, but let's look at this a little bit deeper, just at a deeper level. AISC means all-in sustaining cost. In other words, everything it costs, all-in sustaining cost, literally just means exactly what I'm saying, of $1,541 per geo. Now, considering that gold is currently trading at around $4,000, you can say if the spot price or the sales price is around $4,000 and the all-in sustaining cost is about $1,500, you can do the math for yourself on that one. That's an easy one, right? 4,000 less $1,500 shows you the potential gross operating income. They generated 14.3 million in operational earnings. Their 25 fiscal year 25 guidance targets, as I said, 31 to 41,000 geos. And there's a potential for 30 to 40 million in operating cash flow into the remainder of this year. How about the growth catalysts, right? So this St. Augustine restart. St. Augustine, as I mentioned at the beginning, just recently benefited from permitting. The Q4 is expected to produce about 45,000 ounces of gold and generate $40 million in cash flow. But this flagship Anapola project, that's an open pit mine with 10 plus grams per ton gold grades, has an all-in sustaining cost of only $1,000 per ounce, right? So if you look at the top, the company's all-in sustaining cost was 1,541, and now with Anapola coming online, the all-in sustaining cost there is about $1,000 online. So the average is going to drop maybe to $1,200, $1,300 per ounce, while the spot price on gold is going up, 4,000 plus per ounce. First production 2028 from Anapola, with an output expected of around 150 to 200,000 ounces per year. As I said, I'm giving you the easy math to do, right? What do the analysts say? Analysts, consensus price targets of around Canadian $2.75 to $3.15. It's currently trading at about $2, as I showed you on the slide a few slides ago when I showed you the graph. So there's an upside here of about 50% if you believe the analysts. Top rank rates it as undervalued with a buy from Seeking Alpha. Well, Top Ranks is a coagulator, and Seeking Alpha is just people like me writing stories, so you can take that from wherever you get it from. And of course, if the analysts get it wrong, then they just downgrade or upgrade the stock, right? So they don't really care. The shares are up 53% since their May 2025 call, so they got that right. So good job, analysts. Eric Sprott invested $5 million in a recent $19.5 million financing that was in April of 2025. He invested at $1 per share, and he added some open market buys. You can argue that this shows some strong institutional confidence. On the other hand, you can argue that Eric Sprott invests in almost anything that lives and breathes. So, you can discount that one if you'd like and say, I don't know so much. But anyway, nice pickup price here at $1 per share, and now it's trading at about $2 per share. The market tailwinds are somewhat obvious right now because we're in a gold bullish cycle. And Heliostar has a no hedge strategy that's maximizing their upside exposure because they're not paying extra money to hedge. The interview with the CEO, Charles Funk, on several occasions has focused on his massive growth plans to grow Heliostar from a junior to a mid-tier producer. How about the risks and challenges? Because there are always things like this, and you should be aware of it, right? So operational and jurisdictional, these come up all the time, and they are very, very valid, even though they are repetitive and even sometimes boring. It's Mexico focus, right? So many people have problems with Mexico. They say it's a failed state and it's run by the cartels, and there are many, many things that you could say that's wrong with Mexico. Arguably, without talking away the risk, because you need to be aware of it. You can almost make the same comments about pretty much almost every country on earth right now. There are a few jurisdictions that are certainly very, very mining friendly. Mexico is one of them, but there are geopolitical challenges and problems in the country we know as Mexico. In theory, Mexico is almost like a combination of a number of countries meshed together, and some of them are run by the cartels, much like the United States is a combination of many states meshed together, and some of them are also run by cartels. From time to time, there are permitting delays, with community relations issues. You have to work closely with the community. Heliostar is doing a great job supporting the local communities by supporting their education programs, their sporting programs, getting kit for the people who play sport in the local communities, kitting them out, making them look like superstars. So they're doing a lot of good work in the community. And that's one of the things that we support is Memory Trees, which is my charitable foundation. So we work with some of these people, like the mining companies and individuals who make donations, and then we help to uplift the communities where they work and where they are doing their work or where they'd like to grow. St. Augustine's restart could hit some snags. There could always be snags. I mean, there are all kinds of variety of different snags, even the weather, right? As the hurricane season kind of moves through and hopefully comes to an end and doesn't do too much damage. Those are problems that you just have to be aware of. Anapolo's development capex, about $200 million, may require some non-dilutive funding options like streaming deals. Now, I haven't spoken to Charles Funk about this one, but when I get a chance to speak to him, for sure, if I can remember and I haven't had too much tequila or beer, then I will ask him how they expect to fund the capex for Anapola. How about the volatility or dilution risks, right? So recent financing, the 19.5 financing that I just mentioned a minute ago with Sprott was in April 2025, added some shares, pressuring the price short term. Junior mining stocks can also swing 20 to 50% on news. I'm not talking about Heliostar specifically, but just in general. And free cash flow generation is still ramping up. So Q2 was positive, but not yet at full scale. This comment that I made here, junior mining stocks can swing 20 to 50% on news, right? So good news, bad news, sometimes news is not even related to them. Like I said at the beginning of the presentation, right? So Trump mentioned in some of his mean tweets something about tariffs and China, and the market just tanked. Then everything else just tanks with it, right? So the juniors are particularly exposed to that type of volatility or risk as it relates to news. Often news that doesn't even apply to them. And of course, the market sentiment just in general, right? So right now, the gold price is supporting the miners, but any broader equity sell-off like we saw last Friday, it was on October the 11th, could drag down juniors also. So a couple of final thoughts before I bravely tell you that this is potentially an undervalued stock that if you don't add it to your watch list, you could probably be brave enough to just buy some. Like if you are nervous and scared and you haven't done your due diligence yet, which you should do, uh, whatever you do, don't jump in boots and all. You can do it like I do it. You just buy a little bit, you buy a little bit more, put in some good till cancel orders as the price is volatile anyway, and it goes up and down. Those orders fill, and you just add to it as you go, and make sure that This is part of a diversified investment if you go into Heliostar at all. In other words, you don't, as I said, jump in boots and all. And in addition to that, even if you invest in metals and mining, you don't go 100% Heliostar. I have several of these, as you probably would know by now. I have Aris Mining and Amerigo, which is copper. Aris is gold as well. Amerigo is copper. I have Vizsla, which is silver. I have Sierra Madre, which is silver and gold. I have Heliostar. I have a portfolio of mining stocks. You don't just buy one of them and just jump in and say, Rudy said so, because Rudy didn't say so. Rudy said you must do your due diligence. Anyway, Heliostar for now is a cash flow machine. It's undervalued. Of course, it's also got no debt. It's got a mid-tier growth path from a junior to a 200,000 plus ounces per year producer. It's well positioned in this gold bull market. The analyst targets, the analyst schmanalysts, significantly suggest re-rating. And of course, as I said, it's backed by Sprott. And some people can say like that doesn't matter because Sprott buys everything. But at least, when an institutional investor dumps $5 million into a junior, you could probably say like, that doesn't look too bad, right? And it's got operational momentum. So that's the story for now on Heliostar. You can let me know in the comments whether you like it or not. And if you do, you can say why. And if you don't, you can also say why. That's perfectly okay by me. Of course, you can also subscribe to my channel if you like my content. But for now, that's kind of the overview on Heliostar. I was going to say the flyover, but I first need to fly to Heliostar and then visit some of their sites, which I will be doing for all of next week. And then when I'm back, I'll put some of the content together in a video. And let's call October um, Rudy's Heliostar month because whatever I produce in terms of content for you on YouTube for the rest of October might be related to Heliostar unless something else extraordinary pops up in my inbox. Um, or otherwise some deal comes across my table that is just too good to ignore, right? In which case, I'll share that one with you. But for now, that's the introduction to Heliostar in case you weren't familiar with it yet. And thank you for watching. I look forward to your comments and let's get the conversation started and going. Take care. Thanks for watching. Bye-bye.